I guess as Mike Henry was saying there, you know, the iron ore story has been, yes, one of demand, mostly out of China, for steel production, but also on the supply side, yeah? So we saw those big disruptions out of the Redmond dam, and, you know, maybe there was some supply side disruptions as well, you know, as a result of what Rio's announced in Australia. So I think on the supply side, you know, whenever we're thinking about commodities, it's always a bit of a balance of supply and demand, yeah? So I think that demand story, yes, is softening, and we can talk maybe about the virus impacts as well. But certainly I think in terms of the price impact and therefore the cash generation impact when you're a BHP or a Rio, you know, that could still be supported if there is supply outages, as we saw in 2019.
Right. One thing I want to bring up before we talk about coronavirus is he's also saying that they're looking ahead to the future and they're trying to think about investing more in sustainable metals. Sustainable metals he's talking about are copper and nickel. But then if you look at BHP's earnings, coal and iron alone count for 70% of the group's total EBITDA. I mean, how realistic is that? It's one thing for them to say it, quite another thing for them to completely transform the model so that it's more sustainable in the future.
Okay, so it's an interesting balance, isn't it, between what's generating cash today and what will generate cash in the future. And I think, you know, Glencore as well has announced, you know, being very interested in metals for batteries, nickel, cobalt in their case. I think BHP was saying today, you know, they're not so focused on cobalt, nickel, cobalt and lithium. They're more focused on nickel and copper. And I mean, to be fair, their copper numbers were up, you know, half year on half year. But I think that's the strategic challenge all of these companies have. It's like, well, they want to carry on generating strong cash flows today for their shareholders, for their debt holders, but in the long run, you know, where do they need to chart that course for the business? And I guess, you know, copper would seem to be a good place to be in terms of infrastructure demand and so on, but yeah.
Well, I mean, it depends on how long the coronavirus impact lasts for, obviously, but maybe that could be a catalyst to push them into that direction, given so much of the demands came out of China. Looking at commodities markets, though, iron ore prices are down 12% since the beginning of the year. About 2/3 of steel companies are out of action, I was reading this morning, in China. Do you think that commodities markets, or at least those that are sensitive to Chinese demands, have fully accounted for a sustained downturn on back of the coronavirus impact?
Okay, so great question. Let's have a go. I guess it's a question of scenarios. There was a big correction in oil. Oil came off 20% or so. As you say, iron ore's down as well. I mean, actually, for our credit ratings, we're actually thinking about price assumptions, yeah? So we just take a view on where we think, you know, reasonable case is. And you know, iron ore's, it's around our $80 a ton assumption, yeah, that we have for the rest of this year. So in terms of what we have baked into ratings and credit ratings, you know, it's not looking so bad. In terms of the impact, I mean, we've published on coronavirus, and there's a case there where we say, if we have global containment by the end of the first quarter, then potentially it's a hit in the current year. China GDP could be down to sort of 5% from 5%, but then there's a rebound next year.
Yeah.
So it's this old story between what's happening on quarter by quarter you know, compared with the longer term.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.